Welcome back, everybody, to the opening show of Hoot Loot, the place to be informed, be amused, but never be misled. I got to tell you, I am overwhelmed and I'm a little nervous by all this stuff I got to tell you today. I'm going to explain some stuff that is just so critical. I have so much of it to go through. It's overwhelming. So you got to please bear with me. But I'll tell you this: if it's all about the odds. That's why I'm at the Markonomics hotel, and I'll tell you this: the odds have turned decidedly negative, decidedly bad, and it's all going to be explained to you today when we're back in just a minute. Okay, we're off to the charts now. Now, the first one is basically what we're going through, which is a sort of feedback loop. Basically, freedoms are taken away, then taken away, then taken away, then taken away. They're never given to you. Right now, we're going to try to show you all the ways you're being screwed over by politicians today. And if you don't want to vote out the incumbents and make America laugh again, like all of us want, then I haven't done my job. And this is overwhelming. There's stuff that you are not going to believe. But let's get to Bitcoin. Of course, everybody wants to hear about Bitcoin, right? Well, looks like Bitcoin is not exactly going to be the winner that we all hoped it would be. You know, it's still a password. Sorry. It's just a cheaper password than it used to be. But Bitcoin by itself had associated with it last year, by itself, $13 billion of fraud losses. Okay? There's nothing about cryptos that makes them actually usable. I have yet to meet one person who I've asked, have you ever needed a crypto for anything? No. You know, what do they do? Nothing. Anyway, Bitcoin looks like it's made a double top. I think it's gonna, go down. It's gonna basically, its bubble's broken. And we're going to show some more. Tesla's the other canary in the coal mine. And the reason, it's all bad news for poor Elon. Poor Elon. First of all, Elon Musk sold like 10% of his holdings, or 10% of the company, just simply to pay taxes, okay? And got crapped all over about it. Also, you've got to wonder, his cars are not exactly highly rated. Consumer Reports, a couple of the car magazines have come out giving them bad reviews. And lastly, there's a fatal flaw. Believe it or not, the rear camera, can get in the sun. And instead of having two rear cameras, one that catches the sun, one which does not, allowing you to then be autonomous in your driving, it can't be retooled. And he's never going to have autonomous driving. He's never going to have it, basically. The problem, and the thing is, the cojones on the guy it's really amazing. Because not only that, he raised the price of fully automated driving to $12,000 from $10,000. He hasn't delivered it to anybody. So people are waiting for it. They're never going to get it. And they've already paid for it. And he's raising the price of it. Only in America. And then, of course, there's SpaceX, the company that is going to take us to Mars next year. Oh, God. I still wonder, I still got to ask the same question. Why is it that a man was chosen to go to do these missions, okay? And this is 60 years after the U.S. had the technology to do it. And, I just don't get, I simply do not get that. But that's it. Anyway, Tesla does not look very good. It's kind of breaking down. You notice it looked pretty bad on Friday. So Friday was a terrible day. Now, this is a third canary in the coal mine. This is ARK. ARK is kind of a really trendy, hip company. Trendy and hip meaning that it's an ETF of like trendy, hip companies. All the ones that are like, you gotta own them or else, like cryptos. You gotta own them or you're like a total dinosaur. You're like, oh, you're ancient. Oh, I know I'm ancient. I mean, older than the hills after all. But, nonetheless, there is an advantage to having a few gray hairs or I'd like a few more gray hairs if I could get them, but oh well, what are you going to do? Anyway, Kathy Woods, ARK is down. Look at this, down 50% year over year. These are all the hip companies. Okay, these are the companies that you have to own. All right. The Dow Jones Industrials, this is holding up pretty well, but it's holding up well for a reason. It's very interesting why it's holding up well. It's the kind of companies in the Dow which are holding it up, and they're basically, well, we'll get to those. The Nasdaq 100, it is right on the cusp of breaking down. Okay, so this thing, I put ding ding there, and I'm gonna have the cojones to say ding ding, because I don't know what Velcro I'm gonna eat next time, but ding, ding, ding. All right, ding. And basically, these are companies that are so ridiculously valued. Oh god. All right, the S&P small cap stuff. These have held up reasonably well. So there's no sign that these are going down yet. Some of the things are going down, and I think enough are going down relative to the ones that are going up. You have a preponderance of bad charts. So the next one, the S&P 500, still holding up pretty well. It's kind of come in, but the volume. Look at the explosion in volume. Last few days of the week, a holiday shortened week, an explosion in volume. Dow Jones Transportation Index neutral. Who knows? This thing's holding up there, and we haven't seen it break down. So that's another one that's holding up. Now I know you all want to hear about cryptos. Oh god. Okay, we're gonna say this right now. Cryptos, for the moment, are dead. No one knows what to do with them anyway. They're just gambling instruments is all they are, okay? This one, Bitcoin crash, as we're calling it, this thing has already broken down so much, it's gonna end up being down 90% if it even survives. I don't even know how it survives. It's not run by anybody. It's offshore, and we've talked about the fact that there's no real company here. So I don't know what the hell to say. Ethereum is the Mark Cuban purchase, and he's getting a little less hip by owning Ethereum. Ethereum is actually coming in quite a bit. This is a legitimate company though, and it's important to realize that Ethereum, I won't comment on its value because I don't know what the metrics would be, but it actually is a real company. So, at least it's a real company. Litecoin keeps getting lighter. What can I say? This is another one that just is lighter and lighter and lighter, and ding ding. Oh god. All right, Coinbase, the broker of choice for cryptos. And Coinbase, look at that, approaching new lows, and it's way the hell down. This, you start looking at stuff like this, and it gets overwhelming. That's why I'm so damn nervous and overwhelmed by all this. Let me tell you, here's some of the stuff that we're going to get to. Okay, this is the Bitcoin ETF. It's already down 40%. Okay, if you bought this thing on the opening when it came out, you'd be down 40% already. Okay, that's what I mean by the fact that when something gets too trendy, too hip, I must own, it is the last thing you should be doing is owning it. So there's another example. Here's another one called Bitwise 10 index fund, down a whopping 80%. Okay, so this is a hugely diversified fund of 10 cryptos, and it's down 80%. Okay, good job, guys. Robinhood, poorly named. Normally, Robinhood takes from the poor and makes them poorer, but that's what these guys are doing. This is down 80%. It's under investigation. It is just hurting like crazy, but it's making everybody poorer. That's all I can say. This is Overstock.com. Look at that dive. Again, Overstock.com, it prides itself on being the largest retailer accepting Bitcoin. Okay, and it comes out to 0.5% of revenues in the last 10 years. So big whoop. I mean, and Overstock obviously is a little overstuffed and is going way down again. And what a dive. All right, MicroStrategy. Well, what can I say here? Achieving micro value. This one is another one that is a holding company of Bitcoin. They bought a bunch of Bitcoin. They may be up on it, but that's the only thing that it goes up and down on. And this is another one, another sign that's not, things are not good. And one of the things that is the most important of anything that we're going to talk about today is the dollar. Okay, now the dollar index is been going up. Okay, this one, the first one we're looking at is the 1 year, and it's in a bull flag. It's at a new high, and it's amazing to me that the dollar index hasn't gone down. It literally is like universally thought of as being crap. Okay, but it's gone up, and that is the rub. That's where we're getting this story. All right, so who in their right mind would think that the dollar would go up when the Fed is basically printing them like crazy and they're all over the place, stimulus and spending and this and that. Do I get a stimulus check? No, I don't. Ugh, that really makes me mad, but you know what? I got lots of stuff to talk about today and I'm still overwhelmed. So the US dollar is another thing that is interfering with what people think. And it's an example of when sentiment becomes too lopsided. When people are too bearish on the dollar, it goes up. That's what seems to be happening here. And the dollar index, again, remember, it is not a measure of inflation per se, because the dollar index is a measure of relative value to 3 other currencies, or several other, including mostly the euro. So it's really relative to the euro, and the reason the dollar index is going up is likely the fact that the US actually has a positive interest rate, and Europe does not, and that's pretty much it. On the inflation front, this is the CRB index of commodities. We're still looking like there's some momentum higher, but there's actually, I'm going to show you that I'm not sure that we've seen the peak in inflation already. I know I've been pounding the pavement about inflation, but we're also getting lower demand and bottlenecks and all kinds of stuff, which is just messing with everything. So we're gonna see about the CRB index. The agriculture fund continues to go higher. There's food prices are going crazy. We're going to see some evidence of that, they're also earning higher margins too. Restaurants are. Okay, we've got corn here, which is a major sweetener ingredient. Again, this one is kind of a neutral pattern. Sugar, though, broke down. That's not good. See, what's happening is, I think, is we're seeing the worst of 2 worlds, okay? We're seeing inflation, we're seeing demand fall because the economy's weak while prices are going up. So prices are going up and demand is, and demand is going down. It is just an awful situation to have. Demand goes down, prices are supposed to go down. They're not supposed to go up, but they go up. And so you end up having the dollar depreciate against a basket of goods or whatever you purchase. And, it's not good. You never catch up to that. I've lived through it before. The 70s were all about it. They called it stagflation then. I think it's going to be hyperinflation, depression. It's bad. That's all I got to tell you. And we have Washington to thank for all of it. Vote out the incumbents. Make America laugh again. All right, let's keep going here. Sugar. All right, wheat, another one. Logistic problems everywhere. Droughts, you name it, they've had all kinds of problems. But the thing is, at the end of the day, wheat has logistic problems. It has problems going from one place to another because we're bottlenecked everywhere. It's unreal. Lumber. Can you believe this? Lumber looked like it broke from $1,600, $1,700 going up 800%. It looked like it broke a bubble. It went down 80% and it's now up to $1,200 again. Again, the cost of housing is going up, and the value is, the value of the dollar is not. Okay, livestock is actually remaining very firm, and I put that in there for a reason, but I really want to show you Beyond Meat. Beyond Meat is the Impossible Burger and all that other kind of stuff. The 27 chemicals that they put into it. Basically, Beyond Meat is just a mixture of a bunch of chemicals. So it's gone down, as you can see here, it's gone down about 75%. Again, it was all hip to own it. Beyond Meat, oh so hip, I'm gonna have an Impossible Burger. No, you're gonna lose all your money is what you're gonna do, pal, sorry. All right, base metals, I think they're gonna end up going up for a little while. What we've got right now is this incredible rush into EVs. We're gonna talk about that, and that's causing some problems here. Materials are in short supply that people are leaning towards, like EVs, and we're going to talk about that as well. Copper miners. Now this is interesting. Okay, copper's doing pretty well, and copper and lumber are the two main ingredients of a house. Okay, those are the two main hard costs of a house. So this one is also behaving pretty strongly, actually, come to think of it. And some of the copper producers are actually going up. And what that tells me is that it's in short supply, and basically the price of a house is going sky high because of it. Okay, crude oil, here's another one. Crude oil came down. Why? Because Washington, our friends in Washington, decided to empty the Strategic Petroleum Reserve. Oh, thank you. Oh, that was so wise and smart. We saved a nickel for about a week and a half, and now oil's back up again, and we have a much smaller strategic reserve. Very good. Vote out the incumbents. That's another example for you right there. Gasoline, okay. Gasoline, well, that one's probably going to go up. It looks like we thought it might be around the top before. No, it's not. Gasoline's headed higher in all likelihood too. Now, gold continues to be in a very constructive pattern. And I'm going to say this, okay? I'm going to say this right now. I think gold is going to be a surprise winner next year, okay? Everybody's given up on gold, okay? And as the cryptos are decimated, and they will be, people are going to start to get interested in gold and silver and gold and silver miners. Not yet, not the right time, but this is a very constructive pattern, okay? I mean, look at that. It's in a very, very constructive pattern, and it's likely to have a very good move at some point. I think next year, or this year actually, is the time, and we'll tell you as it comes up. Silver also is looking pretty good. Silver goes into EVs, believe it or not, solar panels actually, and this is another constructive pattern. I would say that silver at some point will have quite a rally, and we're going to be following the gold and silver producers. Palladium, on the other hand, is broken down, and this is weird because the EVs love palladium. Okay, so I don't know what to make of it other than the fact that this is telling me something about the EVs, and it is giving us a little hint here. We're going to get to that in a minute. All right, here's something amazing. 5-year Treasury yields, look at that. They just absolutely skyrocketed, okay? Now, interest rates had been kind of coming in, and that was really weird, but not really as weird as I thought at the time. 5 years are going up, and these are just soaring right here. Look at that, up to 1.6. The 10-year Treasury yield, look at that, broke out to a new high. We were bearish on this thing, and honest to God, I believe that the Fed has dropped the ball somehow, because basically they're the buyer. I mean, they're the buyer. They're the ones that buy these stupid things, and they stopped, or they're not buying as much. The market's very sensitive to these Fed purchases, and that's what this chart is basically telling me. The 30-year broke out also, and this is very, very interesting, because the 30-year had come down quite a bit. It's the long bond, okay? The Fed does not buy this thing very often. They usually buy at the short end, and it's starting to go up. And what that is saying is that inflation is there, and this is going up and catching up to inflation, which is moderating because demand is moderating. So it's kind of like, things are working that way, and basically years of mismanagement of keeping interest rates artificially low have caused much of the problem. Thank you very much. Thank you very much, Washington, D.C., for that. And I will also want to congratulate Nancy Pelosi, who is an incredible investor who believes in insider trading. Congratulations, Nancy. Vote out the incumbents. That's all I got to say. How does it feel walking around the streets of San Francisco, stepping in doo-doo and morphine needles? That's what I want to know. Anyway, you're allowed to do it in the streets there. You're allowed to do it in the streets in a couple places. Anyway, we've got the 30-year, so we're going on to the tips. This is interesting right here. Now, this has come down a little bit, and it looks like this is actually showing a moderation of inflation, okay? Because the tips they accrete value. So what I think is going on is that they are showing they are expressing lower demand as opposed to lower inflation. The two are kind of mixed together often, and I want to separate them because it's very important that you understand that prices can go up while demand goes down, okay? And that the lower demand does not pull the prices down like it should, and that happens when you just have an out of control situation, which we do, by the way. The Fed cannot raise rates. They're so screwed. Oh God. Okay. The Dow Jones Utilities. Now, I put this in there for a reason. This broke out to a new high. This is a contrary indicator that I would keep an eye on. Basically, utilities are an interest rate play. Okay, that's really weird that interest rates are going up and utilities are going up. So that's one to keep an eye on. And when utilities and the Dow make a new high, that's just another Dow theory bull market signal. So that's why I put that in there. All right, the Barclays High Yield Bond Fund. Junk bonds yield less than inflation. Believe it or not. They yield less than inflation. You are buying companies that go bankrupt, and you are forcing them to go bankrupt. You're engaging in policies that make them go bankrupt, okay? And this thing yields less than inflation. Unreal. All right. Costco. Now we're starting to see some interesting stuff. The plunging demand, okay? Costco had been an incredible move. We've shown this over and over and over. And all of a sudden, demand just goes right off a cliff. I think, we've speculated this before, but it's very possible, if not likely, that, there was just a burst, and that burst just ran itself out, basically what happened. And that what we're seeing now is you know, we're paying the price for the mismanagement of 20 years. That's basically what's going on. Anyway, Costco is a retailer that's broken down. It had been very strong before. Home Depot too. That's another one that had been very strong. That's broken down. Target, look at that. That one had been going straight sky high. And look at that, just suddenly just diving. Nordstrom's too. Nordstrom shoppers, it's falling off a cliff, basically falling off a cliff. And that is why I'm so overwhelmed by all this, because I'm seeing signs that we're seeing, demand just fall and just get creamed. Now, Walmart's actually one of the better charts, but it's likely to follow the other retailers, and the retail sector is 70% of GDP. So I don't know how you can have a healthy economy and have retailers that are getting creamed like that. It just does not look good, and that's why I'm so overwhelmed today. I mean, it's so much information today to try to convey. Okay, now we have MasterCard. We put the credit card companies because they too are indicative of retail demand. Okay, so MasterCard they're giving us slightly different signals, but it looks like they've actually broken down after a long uptrend. We're going to see it's broken. MasterCard looks like it has actually broken down. Visa looks like it's hit resistance and basically come back down. And that's another one that you got to watch out for. So Visa is very important. American Express, well, it's a possible rounded top. It's acting very well relative to the other companies. So we'll see. We'll see about that one. Now we're going to go to some of the the mega cap companies and give you try to tell you exactly why it is that we're overwhelmed and these companies are coming in. All right, Apple is actually the best behaved of all of them. I mean, this company still looks pretty good. It's approaching $3 trillion of value. It has actually been at $3 trillion of value. $3 trillion. And $500 billion of it was tacked on when they announced they're getting into the robot car business. Okay? Yeah, no kidding. All right, Google has actually, look at that. Google has been probably the strongest stock of all and has actually broken down. And it looks like it's breaking down. We're going to have to watch it. But when these kinds of companies start breaking down like this, especially on high volume, you got a problem. Houston, you got a problem. Okay? Amazon, you got a problem. Possibly. It looks like it may be breaking down. Hard to say. One thing about Amazon, which is very interesting, is that they went down this week despite the fact that well, actually, it was Rivian. They ordered a bunch of Rivian cars and all that, and they still went down with higher sales and all that. So it's not a good sign when good news is met with selling. Okay, that's not a good sign. That's what happened with Amazon. And oh boy, we get to talk about Facebook. No, Meta platforms. Now, used to be known as Facebook, the company that has non-existent fact checkers, the company voted worst company of the year, the company we've talked about over and over and over and over and over. They absolutely are hands down the worst company I've ever seen in my life. Microsoft, still holding up there pretty well. This company's got to break down for the whole NASDAQ to break down. But, it's just a matter of time. I mean, they can't go up at this rate indefinitely. So Microsoft is very likely to break down any time now. I mean, you can't make money buying high, and then, you can only make money by buying low and selling high. You can't buy this thing low. So you should sell it or not be in it too much because there's no way to make money. All right. So we're going to go to Netflix. Here's another one, a horror story if there ever was one. Netflix has another horror story for investors. It absolutely looked like it was breaking out. Everybody loved it. And all of a sudden, the crowded space of content, Disney and Hulu and Roku and you name it. I mean, number of content providers. Oh, Peacock's another one. There are so many content providers. Apple has a content provider, come to think of it too. So, I mean, it's just like insane. The competition is absolutely insane for content, and it's not going to do Netflix any good. NVIDIA is the poster child of semiconductors, and we've talked about it in the past. It looks like it's broken down, and semiconductors are huge. Okay, once semiconductors break down, you're toast, and this is right on the cusp of it. And that's why, you know, when I look at this, I'm overwhelmed because I think they're going to break down. Rivian Automotive, this is the one that had the pre-orders from Amazon. They make trucks and vans, delivery vans that are electric, okay? And Rivian actually went down on news of these great orders. They got 80,000 pre-orders. They had raving reviews by the auto magazines for their trucks. So, you know, that's what a bear market is. It's a time when good news is greeted with falling prices. And that's what a bear market is. Unfortunately, that's what you're watching right now unfold before your very eyes. And you ain't seen nothing yet. I'm telling you, you ain't seen nothing yet. Ford Motor, here's another company. And I got to tell you something right now, okay? Now, this Ford Motor now exceeds General Motors, okay? And it's the reason I put those two companies there, Rivian and Ford, is because I want to talk about EVs and what a sham EVs are, okay? Basically, an EV is purported to be an eco-friendly car or truck or van or whatever, okay? But it's not. It can't be. For one thing, every time you convert one form of energy, okay, like burning something, into another form of energy, like you do in a gas tank, for example. Every time you lose something, making that conversion. Okay, so we don't have enough power plants, number one. They haven't built a power plant in, I don't know, probably 40 years. Okay, we would have to like double the number of power plants. And everybody is getting into this. Okay, all these companies are getting into EVs, and there isn't enough power plants to go around, and they're not clean. You got to dispose of these things. You know, they end up causing China incredible pollution. Have you seen Chinese pollution? It's horrible. Why? Because they're the ones that make the Tesla batteries, and that's the reason Germany doesn't want to make them. So I'm sorry, AOC, but you're wrong about this one. You're costing the country. You're going to create a worse environment by adopting these kind of policies, not to mention the fact that you're going to leave investors holding the bag. Okay, here we go. The bank index is the one ray of hope in the market that's actually very solid. And I want to put this in kind of last because it's really a function of some other things that we've talked about. One being the fact that the yield curve is starting to steepen, that the 30-year is going up real fast, and that, you know, you're starting to see a steepening of the curve. The steepening of the yield curve means that longer dated bonds yield more than shorter dated bonds. And normally when a yield curve steepens, that's stimulative, number one, to the economy. And number two, it is also helpful for the banking sector. So we're seeing that, and we're seeing that reflected right now, or what that appears to be. The broker-dealer index continues to be well, but they get to sell SpaceX for $100 billion coming up. Oh, God, unbelievable. The Berkshire Hathaway, I put this in there for a reason. This is the next $1 trillion company. Warren Buffett has finally achieved $1 trillion. And he has made shrewd purchases. I gotta admit, I've not been the biggest Warren Buffett fan in the past. I have to admit that too. But on the other hand, he is actually doing very well for his shareholders. And you can't fault him for that. I mean, look at what he's purchased recently, and look at the chart. I mean, it looks fantastic. And who loves this economy more than Big Pharma? Just recently, Moderna has been pushing a fourth booster shot. Unbelievable. And we're talking about Australia now. If you cannot go to work if you don't have a vaccine, you have to stay home. Have to stay home. You are a house prisoner in Australia if you don't have a vaccine. That's what it's gotten to. Politicians of all stripes, all countries, all sizes, gotta go. They all gotta go. They work for us. We don't work for them. They gotta go. All right, UPS is also very important because it is a logistics company, and the reason that it's looking very well, despite retail not looking very well, and they're the ones that ship retail, is because their margins are going up. They're going up. These guys could, these guys are fantastically run. FedEx is not as well run, but this is fantastically run company, and they just are making higher margins, and it's simple as that. And last but not least, we go to FedEx. Also important because it's in the logistics business, not as effective as UPS, but very indicative of the economy. Probably if retail is plunging, as it appears, FedEx will be quite affected by it. And with that, I want to thank you for stopping by, seeing the show. Please like and subscribe right down there. Remember, be informed, be amused, but never be misled. And we love y'all. And